Welcome to the Me the Money Show. I'm Dan Barnes, Editorial Director at Markets Media Europe, and joining me is Shani Bassar, Senior Writer at Markets Media. Shani,
Hi.
welcome back to the show.
Thank you. Good to be here. Good to speak to you again.
So I think today we're going to talk about fixed income ETFs. What's been the investor appetite for fixed income ETFs this year?
Well, given the BlackRock results, I would say they're pretty high. So BlackRock in their second quarter had record inflows of 57 billion into fixed income ETFs. So, and they see the assets under management going to 2 trillion in the next 5 years. So
Wow.
A huge amount of growth. Yeah. And BlackRock have also said that in the first quarter of this year, they've traded the equivalent of the trading volumes for the whole of 2019 in fixed income ETFs.
Wow. That's really interesting. Now, is there a particular reason why people might be going to ETFs instead of bonds? Because obviously with low yields.
Well, it's easier to access the market than trading the underlying cash bonds. And because the ETFs are all listed, so you obviously get price transparency and you can trade immediately. Like it's much easier to find liquidity kind of in an exchange traded product, while bonds are traded over the counter. So it's much harder to trade them.
There was a lot of doubt around fixed income ETFs in the market prior to March and the volatility we saw. What would you say has been the outcome of that volatility in terms of confidence levels in those products?
Well, given the amount of trading that went on during that period in fixed income ETFs, there was a huge increase. And as far as I'm aware, there haven't been any issues. The spreads might have widened a little bit, but there haven't been any failures of ETFs as far as I'm aware over that period. I would say that they've passed the test pretty well. And if they can stand up to the amount of volatility that we've seen this year, I would have thought they could stand up to most market conditions, to be honest.
Absolutely. There's never been any worse, as many traders have said.
Exactly.
And so has anything changed in terms of the market mechanics and how people are actually trading fixed income ETFs, how that sort of thing is working?
I think one of the interesting things that has been done by ICE is that they're trying to kind of standardize the process for kind of setting up ETFs and then negotiating the redemption and the creation of securities that go into them. Mm-hmm. So they've set up the ICE ETF hub, and I was speaking to them this morning, and they said they've also predicted that one of the huge areas of growth will be fixed income. And one of the things they've done is trying to automate the negotiation process as much as possible. So you can't do it completely because there's going to be little details where people need to talk about them, but you can automate, say, between 90 and 95%. And especially in fixed income, one of the things they've done is to automate. They're building an automated link to their fixed income trading venue, so that the person who's looking after the ETF can do the negotiation and then just press one button and then get the access to the underlying bonds that they need for the ETF, which makes the process much, much easier and much more efficient.
Yeah, that sounds very good. Okay, great. And presumably the appetite that we are seeing, is that from both retail investors and institutional investors too?
I think it's come from retail, but I know definitely, like at BlackRock, they spoke about kind of the institutional side. So Larry Fink mentioned on the results call that 60 new institutions have started trading fixed income ETFs for the first time. And that covered kind of pension funds, insurance companies, asset managers, so a huge broad range of institutions.
That's really interesting. Excellent. Shani, that's been great. Thank you.
Thank you. Good to talk to you.